Investor's Edge with Gary Kaltbaum. Straight talk about you and your money. Now from the BizTalk studios, here is Gary Kaltbaum.
And welcome once again to Investor's Edge. I'm Gary Kaltbaum, your host. Hey, thanks for being with us today. Glad you're here, ladies and gentlemen. Happy that you are listening. It is Thursday. It's May 9th. It's 2024. As life moves on very quickly. Hope you're having a good day. You know, ladies and gentlemen, you know what I forgot? I don't think I've ever told any of you. And I'm now allowed to tell you. Actually, I think I was allowed a while back, but I never told you. Now, in case you don't know, I don't look my age. Everybody tells me I look 20 years younger than I look. I'm in shape 30 years younger. Around the second week in July, I'm going to be a Gramps. My son Aaron, who we used to play birthday shows for many years ago when he was young, is married, and with his wife, Marissa, is going to have his first child. So just want to let you know that, Grandpa Gary, oh great, fabulous, wonderful, oh yeah, great. Anyway, that was a little sarcasm. Hope you're all having a good day. This is a simple show, very important show on everything that affects you. And we're going to cover some things affecting you. As we have stated to you, we're heading for an election. And as you know, I'm no fan of either. I'd rather have two different people running for president. I have said to you, I feel like it's the Ebola virus versus the bubonic plague. And I kind of mean it. But it's a binary choice. And there's one thing we do know, where we're going with the guy who's running the show. So it must be covered, especially the lies. We have covered all of Trump's lies and BS ad nauseum here when he was president and through recently. But man, oh man, this guy's taking the cake. And we're going to talk about that in a second because he finally did an interview yesterday with somebody from CNN. And I'll explain in a second. But first, we will have serious talk on you and everything that affects you, whether it's the markets, your money, your taxes, your job, your industry, you name it. We will cover it. And if you do not get this radio show in your city, we'll post it at GaryK.com. We'll also post it on our Twitter feed, which is now X. And if you don't follow us on X, you probably should, because we're pretty cool on X. And you can also email me. You just be nice. Why? Because we're nice. You can completely disagree with us. We can completely disagree with you. But I think we all want the same thing, right? Maybe some wanted to go a different way. Now, who we won't deal with, and that's tic-tac-toe. You can't win, so you don't play the game. And that, by the way, was from the movie War Games, is these scumbags on the campuses. I am Hamas, they say. That's for another day. So, I don't know if you know who Erin Burnett is, but she is a CNN anchor. She used to be on CNBC, and may I state for the record, she's brilliant. I've watched her on CNBC a few times. She's brilliant. She knows the markets up and down. She knows business up and down. She knows taxes up and down. She got to interview Biden, but she gets an F- on being a journalist. And why is that? Because it's very simple. We think that journalists are supposed to hold powerful to account. And if they lie straight to your face, there has to be a follow-up question. That's all. But they're so afraid that the other side will get pissed off and they won't give any more interviews to CNN, that they have to kiss the rear end, and that's a shame because you're getting screwed. So here's how it goes. Number one, Joe Biden said he under his watch created 15 million jobs. We know it's a lie. 9 million plus of it was because COVID coming back. He lied straight to her face, and she knew it, and she did not follow up. He also said Trump was the worst jobs president in history. Of course, that had to do with COVID stopping business. She knew it. She said nothing. Not a frickin' thing. Failure as a journalist. Let him lie. Then I've been able to reduce the deficit. She knows that he's the championship belt owner on deficits, on purpose, the size of government spending, you name it. What he's doing is absolutely disgusting and mortgaging the future, killing your kids going forward. She didn't say a freaking word. The border. Really? He blamed corporate greed for shrinkflation and inflation. It used to be the Putin price hike. No, she did not mention that federal spending has gone from 4.4 to 7.5 trillion bucks, which could be inflationary. She didn't say anything about when he also said that when he came into the White House, inflation was 9%. Gargantuan lie. Inflation was like 2%. So he lied his butt off. And Erin Burnett, anchor for CNN, gets paid probably a lot of money, failed miserably, doesn't give a crap about you, her viewers, the American people. The only thing she gave a crap about, and she probably has the pressure from her head higher up, you have to be nice. You better be nice. So we're letting you know that we're sending an email and a letter to the White House, and we're going to ask those questions. We're going to put in the letter stating we'd like to interview the president, but this is what we're going to be asking. And if you lie, we're going to follow up on it, which means we're not going to get the interview. That's all. So this is what's happening. This is what's going on. She didn't ask him about his tax proposals that she knows about. He's calling for raising the long-term capital gains from 20% to 44.6%. Boy, that won't hurt anything. A wealth tax. Oh, but don't worry, it's only on the wealthy. Yeah, sure, they'll get away with that. And unrealized gains tax on capital gains. So in other words, you made 10 grand on that stock and you still own it. They're going to want money from you. But I don't have the money. Well, you're going to have to sell it. Oh, that's right. Vicious cycle. In other words, the man is insane. He's a Marxist socialist control freak. And these proposals are obscene, out of bounds, and make Bernie Sanders look like Ronald Reagan. The country voted in Bernie Sanders left. And we're going to call him out every time. And every time he says something, we're going to call him out. If he tells the truth, we're going to tell you he tells the truth. If he does something good, we're going to tell you that. When Israel got attacked, for the first few days, we complimented Joe Biden big time on this show. Now he sucks. He has showed himself to be, I need the votes. So screw Israel. But guess what? Israel don't care. They're going to do what they got to do. There's a ton of terrorists in the southern border. By the way, Egypt won't let a Palestinian into Egypt. One guy got through yesterday. They beat the crap out of him. I don't see any protesters yelling and screaming about Egypt. Interesting, huh? Anyway, that's the story. We'll keep covering it. The markets are separate. We'll keep doing the markets. Some good things happened today. We're going to let you know. The Dow is taking over leadership in the market while other things are like kind of sort of going by the wayside. We'll see, and we'll cover each and every sector. The most important thing we have to tell you on the market is the big indices are above the 50-day moving average. And what did we say to you yesterday? Emphatically. Above the 50-day moving average, potential opportunity. Below, potential bad. That's all. You cannot ascend if you're below. You can only ascend if you're above. I take that back. You can sit or only ascend if you're above. Below, you either drop or sit. But being below bad, being above good, and us being above the major indices, they are furthering being above, and we'll see if they break out to old highs. That would be great, great news. That's the story. We'll go over the numbers, we'll go over the sectors, but there's one thing sticking out also. Man, there's a lot of stocks blowing up on earnings. Man, oh man, a lot of stocks blowing up on earnings in the face of the market going up as a whole. Why is that? Well, beats the heck out of us. The job is just to stay out of those stocks. The other part of the equation is what we told you last Wednesday. Central banks started easing. not by lowering rates, by lowering the amount of unprinting of the printed money. And ever since, interest rates have dropped and dropped again today. And as we have been telling you for a very long while, the market likes interest rates going down. The real market, the 10-year yield, not Jay Powell. The market does not like them going up. And you had another good day on yields today going down to 4.449%. And maybe making a lower high in yields. And that's your mortgages and all kinds of other stuff. All right. Whew, I had to do that 2 times. Up next, the markets and whatever else. I'm Gary. This is the one and only Investor's Edge.
Hi, I'm Gary Kaltbaum, host of the nationally syndicated radio show Investor's Edge. We're not just handsome radio people. We manage investors' money for a living, specializing in fee-based discretionary money management. No big commissions, just a fee on the assets that's managed. We also provide a full range of personalized services, including retirement planning, fixed income, and educational needs, all to assist you in achieving your financial goals. Understanding not all individuals have the same needs, we'll carefully evaluate your personal goals to determine a proper investment strategy. If your current approach to investing is not getting you to where you would like to be, call us to make an appointment for a complimentary portfolio review. The number to call is 888-422-5559. That's 888-422-5559. That's 888-422-5559. Investment advisory services offered through Kaltbaum Capital Management.
It's time to switch on the integrator units and get the brain cells working.
You're listening to
Hey, this promises to be fun.
Investor's Edge
The last bastion of quality programming.
with Gary Kaltbaum.
It doesn't get better than this.
So let me repeat, in case you don't understand. When we talk about being above or below the 50-day moving average, it's simplicity for us. It really is simplicity for us. If you are going south on I-95 from Miami, you're going to Key West, not to New York. How's that for simplicity? If you're going north on 95 from Miami, you can't go to Key West. You're heading to New York. How's that for simplicity? Gary, what the heck are you talking about? Well, it's very simplistic, as I've said to you. The market has a certain physicality to it. And I'm doing this for the benefit of those that either have heard it a few times and don't get it, or haven't heard it before. So when you can put out a roadmap of price in the market, you can put all kinds of things on that little roadmap. They call it charts in my business. And one of the things we put on there that I learned is something called the 50-day moving average. Now, you would think, what the hell is a 50-day moving average? Well, all it is. Instead of me saying to you, well, Oracle closed at 116.64 today. And on that chart, that's where price moved. And let's say it goes to 117 tomorrow. Well, it moves up a little bit tomorrow. The 50-day moving average is the close of the last 50 days. Each day added up and divided by 50. And you can draw a line as that average moves up and down. Versus, well, the stock went up and down and up and down and up and down. It smooths things out on the roadmap. That's all. And the physicality of it is simple. Bull phases are made up of an ascending 50-day moving average. As price is above it, and all pullbacks are contained by that 50-day moving average and continue higher. Bear phases are when that 50-day moving average is heading down and price is below it, and every rally into it fails until it stops failing. And of course on the upside until it stops going up. That's it. And we have been able to show on this show for years how we're able to just sidestep all the bear markets. And we're not just talking about the Dow, S&P, NASDAQ. We're talking about sectors. How many times have the market been up, but oil's been in a bear market? We say avoid the oils. And what did they do? They went down until they stopped going down and turned up. And that's all we're talking about. That's it. And recently, all the big indices went below the 50-day moving average. And then after a month or 6 weeks or 8 weeks or whatever it is, they've gone back below. Gone back above. And that's good news. And what that does, it provides opportunity. It does not mean it's going to go higher. You can just go above and sit around, do nothing. But it provides opportunity to go higher. Nothing bad can happen. Nothing bad can happen if price is above the 50-day. It does not mean good could happen. As I said, nothing good can happen when price is below the 50-day. Doesn't mean bads can happen. You can break below and then turn back up. By the way, we just broke below, and it took a while, but we just broke back above. And now we'll see whether the market has juice or not. Helped along a little bit today. We'll see. You broke down on the S&P below the 50-day on, give me the date, I know I can get it, here, on the 15th. You broke back above it on the 6th. That wasn't long. Bear markets, though, I can promise you, go through a lot longer process. And now we'll see what the market has to give. That's it. And then there's also the rhyme and the reason, the 10-year yield, which had been rallying up, which caused the correction, are now plunging. Let's take away that word, dropping. Not so sure it's a plunge yet. And that is given a tailwind to the market. And that's why we watch it closely. That is the direct correlation this market has had for quite a while. And this go-round had everything to do with easing off the pedal by Jay Powell, another government entity, another miserable failure that has enabled massive debt and deficits with his utter stupidity. But that's another story. So just letting you know, we're back above, had a good day today with some warts, as always, but a good day today. And how do we describe a good day? Good advanced declines, good tone, decent areas on the move, and we'll see what happens. If the big indices can break through to the old highs and above, got another leg up. Will that happen? Could that happen? Sure. All for it. And that's that. Now, the Dow was up 0.8%. I would tell you it was up 331 points. That sounds a lot better, but it's only 0.8%. But still good. And above the 50-day moving average. And you got some dead comatose stocks waking up. If there's any issue that I have, volume continues to be light, but price performance continues to act better. The economy is slowing down. I think this is part of it. The good news is there's no chance of a deep drop in the economy. How do I know? The Dow would be, let's see, we close at 39.3, we'd be at 34. The market's always in front of economics dropping big time. We'll be watching that closely, though, because the trajectory has changed. But the market loves the lower interest rates because of that right now. Up next, we'll continue with that noise and much more. This is the one and only Investor's Edge.
Listening to
America is talking.
Investor's Edge.
He's got to be pleased with that. The crowd is just on its feet here. He's a Cinderella boy.
With Gary Kaltbaum.
Comes highly recommended. You're going to feel better if you talk to him.
By the way, let me segue back to something. Because as you know, we're talking the election as we move forward and what's going on. I know, and I'm a small sample. I know some people that know I can't stand either candidate, but still tell me how they feel. With what Biden just did with Israel, they lost the vote. He lost the vote. A few of them in Florida, which would have no effect because Florida will vote for anything with an R right now. That has changed big time. It used to be a big toss-up. But I must tell you, some important states of like Arizona, I'm getting some, we're on that great station KFNN there. Ron Cohen, the man there. I'm getting some from people that Biden lost my vote. That's it. I was close already, but now I'm done. I can't stand Trump, but he's getting my vote. That's what I'm getting from people. And let me just state for the record, one state moves here or there, that's it. In case you don't know, it's down to 6 or 7 states at most this point in time. There'll be a couple that fall by the wayside that really go one way or the other. Just so you know, there's a reason why Biden is spending so much money government-wise. That goes into government statistics. There's a reason why he's handing out your taxpayer dollars to people that have loans. Please vote for me. Look what I did for you. Little do they know, it's going to come back to haunt them in the end. So just letting you know what I'm hearing. And I got a little radio show here, and I'm on TV, so I got some decent contact out there. We'll see. Back on the markets. So last year, July, we corrected as interest rates went up. But then we had a second leg down and a third leg down. Corrections normally have 3 legs down. Well, this one may be different. And let me state emphatically, as long as the Dow, S&P, NASDAQ, and NASDAQ 100 stay above the 50-day moving average, there is opportunity. Blanket statement. If they break above the old highs, even better. We also now have, as I have told you, emerging markets and China on the move. Though trust is low, but they are working. The pullback didn't last. Gold. We specifically told you when we entered and when we sold with profits, we got back in today. We think the correction in gold is probably, let's put it this way, anything we tell you we do, we have stops in place. We don't screw around. But we think probably, and that has to do with the market recognizing that Jay Powell's going back to his normal old ways, and he's now very political. Just remember, he's doing all this right now for the election. I'd say it to his face. He couldn't lower rates because then it would really look political. Let me do it the other way. And so far it's worked. You also have Janet Yellen pressing it. As the Treasury Secretary, she's doing new refunding of funds on lower, shorter-term paper, the 3-month, 1 year, and not the longer term because she wants to keep longer-term interest rates down. Why? Markets. Why? The economy. But there is the artificialness of all this and the politicalness. I expect nothing different from these people, these power-hungry maniacs that play God with free markets. That said, we only deal with reality, and it's pretty good. New highs picked up a little bit today. It's very low beta-ish, though, which means not the high flyers. If I told you so, let me put it best. Bank America, Bank of New York, American Express, Morgan Stanley, Goldman Sachs, Home Depot had a good day. Caterpillar had a good day. By the way, both Caterpillar gapped down in earnings, but's rallying back up pretty quickly. Home Depot got trashed recently, and by the way, earnings down 15, revenues down 3. They report in 5 days and is still way off the highs, but better day today. It's low beta. It's not like I can come out and say to you, Tesla was up 70 points today. We don't have that. My low beta, what I call stuff screen, quite the red today. Quite the red. My growth screen, my stuff screen was quite the green. My growth screen, quite the red. Got to get and by the way, I don't drink. Next up, blow-ups. Just letting you know. Blow-ups. Airbnb, that blew up today. You ever hear of Duolingo? It's one of these softwares for learning languages. Down $44 today, 18%. And there's been a ton of them the last 3 weeks. That's the weird thing for me at this juncture. You don't usually get so many at this juncture, but as long as other stuff is working, terrific. And again, back on the gold, silver also, and the gold stocks are now moving hand in hand decently with gold miners when they were very much, the gold miners moving hand in hand with the gold when very much they weren't earlier. You go look at the GDX and you'll see what we're talking about. And of course, gold moves on the easy. Now, what could be the repercussions? If inflation has been picking up, and it has, if inflation is picking up, and it has, and all of a sudden the central bank goes easy just to protect the election, is it possible that's going to come bite back? Well, we'll know it if interest rates start backing up again quickly. But so far, so good. A job well done. Good reaction on that. Got a bunch of questions on the Donald Trump stock. In case you don't know, we came out and said the valuations were ridiculous. It was 70. It went down to 22. Do you know it's back up to 54? Wow. Just want you to remember again, nothing's changed. Nothing has changed. Less than $4 million in revenues with a $7.5 billion market cap. When all is said and done, this will be single digits. Could it go to 1,000 first? Hey, with these crazy markets, anything's possible. But when we go into a bear market again, a bearish phase, all the curtains come down. I think Warren Buffett said about the beware when the tide goes out, the naked man shows up, something to that effect. Not a good picture. Anyway, you get the point. And that is not a political statement. The fact is less than 4 million revenues, lose a ton of money, no growth whatsoever. The stock's moving back up. If you own it, God bless you. I don't have the grapefruits to own something with less than 4 million in revenues with a $7.4 billion market cap. Up next, what else we got for you? Thanks for being here. I'm Gary. This is the one and only Investor's Edge.
You're listening to
What are we waiting for?
Well, what are you waiting for?
1, 2, ready, go.
Action!
Investor's Edge with Gary Kaltbaum.
Boy, I miss Rush so much. And I don't think they're ever going to tour again. God bless them. They have kept their word about touring once Neil Peart passed. Darn it. Glad I saw him many times. And all my favorites now. I know Rolling Stones are... I've seen Rolling Stones enough. I don't have anybody left to see. All of them either passing away or not touring anymore. Or as old as dirt. Man, oh man. I will see Taylor Swift. I was going to see her if I was going to go to Wimbledon because she's playing around London. I think I would have gone into Dublin, Ireland. It's, just so you know, in Europe, the price for a Taylor Swift ticket is like 1/3, if not more, in the United States. She's going to be in Miami, I think in October. The tickets are like $2,500 for the crappy seats. Unbelievable. I just got to see her just for the heck of it. I think it's like an event. But I got nothing. I don't know what else. I'm done musically. What can I tell you? In the news, I'm just going to give you, I think I've done this before. I gave you the names of some Twitter feeds that I follow. I'm going to give you another one now that I love. Because I think going forward, one of the things that are going to be very important is price of heavy real estate. Triple Net Invest. At Triple Net Invest. And basically all they do is it's a real estate person that shares all the things going on in real estate commercially. Like right now I'm reading from this morning, owner of a San Francisco office building may take a shocking $100 million haircut in just 5 years of a building, 255 California Street Bought it for $156 million in 2019. Looks like it's going to go for $50 million. And I just been reading one after the other after the other. The iconic AT&T Tower in St. Louis has just sold 1.4 million square feet. Holy crap, is that right? The building was sold by AT&T to a real estate investment trust for $205 million. It just sold for $4 million. No, not kidding. Fort Worth's tallest building trades at a shocking 91% discount in just 3 years, $137.5 million to $12.3 million. A credit bid at an auction. Canadian investor just took a $176 million loss on another San Francisco office building. Canada Pension Plan Investment Board acquired their 45% stake for $219 million in 2015. They just sold it for $43.5 million. I'm going to do one more. Apartment complex in Tampa sells at a massive $32 million loss in just 2 years. Previous owner paid $115 million or $444,000 per unit in 22. They just sold for $83 million or $320,000 per unit. Why am I following this morbid crap? It's because when you are a debt-laden government and a debt-laden economy, and all of a sudden, all these losses are coming, what's the outcome? You get where I'm going? In case you don't know, here in Central Florida, we have this area called Windermere. It's high end. I've seen it go from hardly any houses to like 300, 400, 500 houses. And all the high-end houses, which started out at Fantasyland, guess what they're doing? They're knocking down $500,000. 300,000, 200,000, 400,000. It may start to be game on. So I'm watching very closely. Why? It's called the wealth effect. It's simple as that. And we hope it doesn't get worse. We don't want it worse. But this could be the outcome. Remember what happened. 0%, 3% mortgages, free money. And now we're normalized. The other thing I'm seeing here in Central Florida, houses up for sale for 180 days and not being sold. A lot of that going on now. A lot of it going on in South Florida. Boy, oh boy, in Southeast Florida. Prices in Naples, insane. Ain't going to last. So we'll keep you up to date on it because we want to stay on front of these things. If you remember, back in 2007, we were one of the few people that stated on TV and here, I'm worried about a housing bubble. And we never got credit for it. And frankly, we don't give a crap. But we never got any credit for calling it. They let other people take the credit and they get on TV. Look, I called and they didn't. We did. Real estate problems happen when it's staring you right in the face and nobody cares. Nobody's caring about what I just read to you. And I just read to you 5 or 6 things. There are hundreds of them. And I know you can blame COVID and people not going back to offices. Not in rural areas, maybe in New York City. So we'll see. We will stay on top of it. We will keep you up on top of it because when the debt bomb hits, the market will show us the way, and we will make sure if the 50-day gets taken out on the big indices to the downside and does not get back up and turn back up, you will know it because we will be telling you, and we will be giving you our tactics, how we will be working at it, and we'll just let you know some underlying crap is going on. But for this second, the drop in yield since last Wednesday Has the market recovering a bunch of what we lost? We'll see where it takes us. That all said, I think I did that with one breath. You have a great evening. Drive carefully. I'll be on with Neil Cavuto tomorrow, noon hour, Fox Business Network. Check that out. Same time tomorrow, radio show. And tonight, when you get home, make sure you hug your family. Make sure you hug your children. They will feel better. You will feel better. I promise. Stay well. Be well. Bye-bye.
This has been Investor's Edge with Gary Kaltbaum on BizTalk. To listen to past episodes or to get in contact with Gary, go to GaryK.com. That's GaryK.com.